As we know, if we look at infrastructure funds over the last 1 year, you'll see that in spite of the really bad year that infra funds have had, they seem to be back. Over the last year, on an average, infrastructure funds have given a return of 76%. Now, the best performer is at 112%. I'm going to bring in Dhirendra Kumar now to understand where this performance is coming from and if he expects infrastructure funds to do similarly well in the future. Dhirendra, thank you for joining us. I want to understand this. You always tell us to avoid infrastructure funds, but given the performance we're seeing right now, tell us first how long you expect this performance to continue for.
Yes, infrastructure has come on the forefront, and I am quite impressed by the performance of the infrastructure funds, and many of the funds which are less exposed to the heavily indebted infrastructure stocks, they have done much better. In fact, the funds which have moved out of infrastructure substantially, they are a bigger beneficiary. So I think that I'm not very hopeful of this the infrastructure fund sustaining this performance, because some of the fundamental problems of our economy, of these companies, they still continue. Everybody is talking about investment-led market recovery, or I'm talking of the recovery of the real economy. But at the same time, the biggest problem that we face today is there are large sectors which do not require investment. There is a problem of capacity utilization. They are grossly underutilized. Likewise, the big infrastructure companies, they are unlikely to thrive and prosper if we have the interest rates which are at these levels. So these are the fundamental problems. Of course, there has been a big recovery. These stocks were down in the dumps. The whole optimism around the change of government and the market recovery has led to their resurgence. And I would look at this recovery as an opportunity for investors to get out of infrastructure funds and diversify their portfolio.
Well, Dhirendra, the best performing infrastructure fund over the last 1 year is HDFC Infrastructure. Give us your review of this fund right now. It's at 112% return. Tell us what you think of the fund management, of the way the fund has managed the last turnaround in the last 1 year.
Yes, HDFC Infrastructure Fund was an infrastructure fund which also suffered the most. If you look at, yes, it has made a remarkable recovery. This is a fund which is, backed by the conviction of the fund manager, and it was into a set of stocks which has made the smartest recovery. But as I said earlier, that an investor has to decide whether he wants to diversify or be in an infrastructure fund. I would always urge investors to keep away from infrastructure fund. But at the same time, the kind of conviction which this fund shows, I would say that if you have to be in an infrastructure fund, it is a good fund to have.
Well, the fund does have 900 crore rupees asset under management, Dhirendra. Tell us this. If there are investors who are making a tactical move on infrastructure, like you said, they're looking for that exposure, what should they keep in mind when investing in this fund? What sort of investor should use an infrastructure fund right now?
Yes, size is not much of an issue in the infrastructure funds because the underlying companies have great depth. These companies can absorb significant amount of money. Infrastructure funds are not invested in small cap companies, mid cap companies. So I don't think size is much of an issue here. It's a worthwhile fund, and if you are convinced of infrastructure and you want to have an infrastructure fund, it is a worthwhile bet.